Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 18th, 2017. It's after market hours now. It's about 4:40 p.m. Eastern Time, and I wanted to do a video on the home building sector and some of the stocks that stand out to me right now. Now, I had made mention either in the trading room or on the front page or both, just a couple weeks back, that we had a stop rate on XHB. And at the time I mentioned it still looks good. This was a mistake on my part. I had listed the stop parameters a little too tight. I had listed the suggested stop as any move above 39.10, and in hindsight, that was a mistake. Must have put a horizontal line here. I had about 39.11 or so on that orange line, and I was eyeballing the previous reaction high. Now that's what they're going to shoot for on a stop rate because that's where a lot of stops will be placed. That previous reaction high was 39.22. My bad for not zeroing in on that. And then I would have given it just a little bit of room above there because that's what a stop rate's all about. Take out the previous reaction high. This chart still looked good all along. This was simply, as you can see here, a breakdown of this trend line and a back test. We had the bearish rising wedge defined by these two uptrend lines. You can see the negative divergence. And again, just a sloppy, especially considering the sideways grind in both the broad market and as well as XHB. When you have the extreme low volatility that we had up until just recently, that is and low volume as well. That is a field day for program trading. Big firms with a lot of money can run in. They know where the stops are placed. They can see where the stops are placed. That's right out there unless you're using hidden stops or some kind of buy trigger order that only sends to the exchange once your your stop price is triggered. So either way, that's what that was. And again, I had made mention, still looks good. So I'm going to update this because it still looks good from here. Right now, as of today, we closed within 37.44. You can see my first target's at 37.38. So we closed within just a few cents of that target today. And the action again, just taking a step back and looking at has happened. We had a breakdown. We hit that S1 level, bounced up, back tested the wedge from below, and then have been moving lower since. So we're coming up on support. So right now, well, you won't. This video will be out after the close on Friday, so we'll see what happens next week. But you want to wait till that level goes. And keep in mind, I always set my price target on shorts to cover just below the actual support level. I have that support line at 37.32 right here. So either way, maybe a little reaction. Objective area would be to short back on a bounce up to S1 if we get there at 38.10, or wait for an impulsive break and move down below that support level around 37.32. But overall, the potential, there's a lot of meat on the bone longer term. I believe if you're patient, and I'm going to go over the charts here on some of the individual home builders that stand out. Just a few, we won't go over too many. But most importantly, I try not to lose sight of the bigger picture when trading. If I were looking at that daily chart that we were just on a minute ago and saw a bearish rising wedge pattern confirmed with divergence, and it was, let's say, back here, over here, or somewhere else, it would be just probably a quick swing trade to the earlier targets. Whereas what I'm looking at here, this is the bull market, the primary uptrend line off the 2009 lows. This is when the bear market ended in March of 2009. That's when the S&P 500 bottom, most indices. And you can see a well-defined trend line. You have three reactions along the way, starting with those 2009 lows, a little brief overshoot there, but certainly a reaction off that trend line. Reaction there, reaction there. Now here we are, and what we're doing is like any trend that's weakening when the excuse me, when the strength or the vigor of a trend starts to diminish, that you get these wedge patterns. Prices don't have these very strong rallies off the trend line. You just see the rallies become weaker and weaker, and that's what we call momentum slowing down. That's confirmed by these the price and momentum oscillators and indicators down below, so you can see the negative divergence. And so this is pretty much our pattern here. Where I'm going with this is, this wedge breakdown on the daily we're looking at. If those targets that I'm looking at, T1 to down to the third target, let's say, if that's hit, What that's going to do is have longer term bearish implications here on the weekly chart because it will have taken us below this long-term uptrend line. Um, where do we go from there? Haven't really didn't plan it out right now, and I'll give some updates. But I could see the home builders moving down as low as that $28 level, quite likely over time, and at the very least down here at about 32.70. That's where that line is. So again, think of it that way. This is just the near-term daily chart, which in itself is a significant time frame for swing traders. Um, but if we get down here to that potential fourth target at 36, you go back to the weekly chart, you can see that will have taken us down below the trend line here, or right about, actually put us right about on it. That's interesting. I didn't look at that before. Right about down to about 36 if I get on that trend line. So then we'll have to see how things act from there. So if we break that level, then we can go a lot lower. But as of now, that's just all the more reason. I think that trend line on the weekly I just looked at will act as a magnet. Usually when you see prices starting to head down back towards it, it's going to be tested again, especially with prices compressing within that range I talked about on the weekly. So there's a target. And again, you can swing it down. These are areas that you might have a reaction. A reaction is likely along the way. Now let's look at a few of my favorite names. Keep in mind that the XHB Home Builders ETF is actually the majority of stocks in there are not home builders. And the reason for that, there's only a handful of publicly traded home building companies. And on top of that, even though this is a pretty liquid ETF, the market cap on those companies really can't sustain the type of liquidity we see in XHB. Therefore, you have these mega cap stocks like Home Depot, Lowe's, Johnson Controls, Mohawk Industries, all the way down. The first home builder there by market cap is DHI, and you can see DHI is a that's DH Horton is a 13.8, almost $14 billion company that compares to 182 billion market cap in Home Depot. Now, of course, all of these companies are related to the housing industry. If new housing starts take a dive, um, yeah, Home Depot and Lowe's are certainly going to feel that pain. That's just a given. So obviously, there's all types of companies in here related, whether they're building materials or something else. They're in the housing industry. So I won't go over each and every one of those. However, we'd be remiss not to look at some of the big names. Here's Home Depot, ascending price channel. We had a breakdown back test, and this is one that's clearly in a downtrend now. It looks like well, it's easy to say right now. This stock, at least for the time being, is topped, and it's been working its way lower. And I don't really see a whole lot of support on this one until we get down here. I do see some support a little bit right about there. You can see the reactions, and that reaction we overshot a little bit. But I think Home Depot continues to work its way down. There's Lowe's. And again, let's just take a look at the bigger picture on these. This is where um, it helps you define that time frame as a swing trader or a longer term trend trader. Do you tuck some of these positions away and go for, the high double digit returns instead of just the low double digit returns? Lowe's is flirting with this key uptrend line support level. Home Depot, and even more significant, look at all these reactions. So this is a high level wedge type pattern, contracting price channel, if you will. Doesn't matter. I just have that upper line there to show you the divergences, the negative divergences in place. They're pretty powerful. And you can see a lot of reactions on this trend line right here. And we're dancing on that trend line now. Big bearish engulfing candlestick there this week. That's a weekly close. That is bearish. And if we go much lower, we're going to crack that. And I would put the odds at extremely good that if that trend line goes on a weekly closing basis, then we are heading down to revisit this longer term trend line. And that's generated off the 2009 lows. Just to give you an idea, roughly, that's going to be, I had to grab to the right of that so I don't move the trend line. Let's just say it takes us this long to get there. That's about a 18, 17, call it 15 to 20% drop, 15% or so in Home Depot. And that would obviously have a big impact on XHB. All right, now let's look at some of the individual home building stocks because I think there's more meat on the bone on the pure play home builders than there are on a lot of these other peripheral type companies. DHI, which again is DR Horton, very well defined uptrend line. You can see a lot of reactions there, a lot of reactions back there, and we closed right on that trend line this week. We had this failed, I think I had highlighted that in one of the recent videos. We had a bull flag, perfect textbook looking bull flag pattern, but it failed to play out. In fact, it was a false breakout. We had a 1 day move, and as I often say, fewer things in trading are more bearish than a failed long side breakout. Reason being, at least my theory, all eyes are on that. If you're a trader, you're watching that bull flag pattern. You see the move up, the flagpole, the flagging action, which you see a bull flag form on diminishing volume, and then a breakout. Longs pile in on those breakouts, and when it fails, they have to turn around and sell their positions. They get stopped out. The shorts see that. They pile in to take advantage. All around, that's not healthy price action. If there was a lot of pent up buyers in the market on a bull flag breakout like that, you should have seen follow through. You didn't. Stock hasn't cratered so far, but that's not a good sign. And now we're testing key support level. If DHI breaks that level, from where we closed today, we're looking at a drop of about 3% to that first target right there, and about another 8, almost 9% down to this level. And again, let's not forget the bigger picture. I'm going to talk on each one real quick. This is the bigger picture in DHI. This is a 10-year weekly chart I just jumped out to. Long-term uptrend line. I expect at least a reaction when we get there, most likely. So let's see what happens if and when we get there. But again, these stocks are they're stretched, as is this bull market, second longest in history by a long shot so far. Coming up soon to be, the longest bull market. If this continues for much longer, we'll be at the longest bull market in the history of the financial markets here. So let's play the odds here and just realize that these aren't going to go up forever. All right, LEN. This one's broken down. I had, when I covered this in the first video, I showed you these parallel trend lines. Sometimes I'll do that if both lines capture a lot of reactions, which they do here. So, and as I said in that video, I would only give it attention or consider a trade when the second of the two breaks. I'm not going to, when I see parallel trend lines, why short when the first one breaks? You want to see prices break below the lower trend line just to be safe, especially when things are in an uptrend. That's what happened, broke down. We back tested. After back testing, we hit that uppermost trend line, the inside trend line, and have since moved impulsively lower. So that is TA 101, breakdown, back test, and then an impulsive move lower. There's some support there. I'd be remiss not to add that line at this point. I can see a lot of reactions right here and that level right about where we closed, 5180, call it. And at minimum, I see a move down here to 49.59. And if things get ugly, again, you look at the longer term charts, and this one, I don't see too much in there that scares me. It's stock's getting stretched, but at least a move down there. NVR, this is another builder, residential construction. Just a beautiful, clean, very well-defined ascending price channel. Looking at these two lines, I've since the video I added this midpoint, it's amazing. Most well-defined price channels, you can put a line in the middle. You can also use an Andrews pitchfork. It's a charting tool to do that, but I just put a line in the midpoint, and it's just amazing how well those midpoint channels act as support and resistance within the channel. When the trend's very strong, you have prices right up, you can stay long there. You can set a stop below the midpoint of the channel. That line isn't exactly on the midpoint. I missed it a little bit there, but you can see what I'm saying. And then we were below the channel. We jumped back above it. It acted as support. And the breaks below, you tend to visit the point being, once you break below the midpoint, you tend to visit the bottom of the channel. And for the majority of this trend, we were above the channel, but we've had a few breakdowns, and they're becoming more frequent now. If we break down again, it will show again diminishing strength of the trend. We're not there yet. We're on the midpoint of that channel, and a breakdown, I think it's about a 4% or so drop below. That would be, you could short it, just a quick trade down to the bottom of the channel if we break the midpoint. But with these divergences, these powerful negative divergences in place, they tell me be on the lookout for a more meaningful trend reversal. In other words, a breakdown of the price channel itself, and then a move all the way down here to this target around 22.57 or so. That would be my first price target. And ultimately, the what I call if things get ugly target, we could go all the way down here to 18.23. NVR, how do you look on the weekly chart? Not good. This is not a sustainable uptrend. It doesn't mean the stock has to crater and spiral all the way down, but at the very least, this one's going to come back in sharp uptrends, especially with this tight price compression like this, don't last forever and they usually break down. In fact, you just go back in time, you can see this stock, like most others, has a series of well-defined uptrend lines. They break, and that's your sell signal. And it might not look like much on the log scale chart that I'm using. There's a 20% drop from the highs to lows. Here's about a close to 18% or so drop high to low. Um, who knows? Let's see what we get here. I gave you some price targets on the daily. PHM, Pulte Homes, beautiful looking chart and just a nice, well, clean rising wedge. We had a rising wedge right here, breakdown, back test, boom, nice drop. Now within that pattern, we set up in this larger wedge defined by this uptrend line here and this line showing you the divergence. And all we need is a trigger, a breakdown below this trend line, and that will bring us down here. And you can see all the support levels along the way. It's up to you if you want to try to game, reactions. Reactions are likely; they don't have to happen there, but I think ultimately go down here to the second target level around 2210. That's the actual support level, and that would be a decent trade even if that's all we go down to 2210. That's about a 12% drop. And again, who knows if the longer term trend lines are going to break on this next move down. Like I said, the odds for reaction there are good. So as a swing trader, maybe you go down to there, cover, look to game a bounce, and then if the long term trend lines break on a weekly closing basis, then you can position for a longer term trend trade short position. All right, OC. Owens Corning. We had a little false breakdown there. This was probably, I know I covered this one in the video, and I would have probably had these lines, these potential support levels, targets. So we broke down, but we hit support. And then from there, we bounced, we snapped back within the wedge. But that does not in any way, shape, or form, at least in my opinion, negate the validity of that wedge. So looking at just another divergent high, just recently broke down, back tested, and there's your support levels. Couple more to go here. We have TOL, Toll Brothers, rising wedge, breakdown. This one's already started to move lower. And let's take a look at the weekly chart. This one looks to be a good, nice triple top resistance. This one continues to fail at this horizontal line. Actually, 4 failures here. This is the 4th failure at that level. So the $40-ish level is just a brick wall for Toll Brothers. And if you look at this uptrend line on the weekly chart, we've already broken down now, and we're moving lower impulsively with 2 red candles so far since the breakdown. So this one looks to me as if it topped. I don't think I did the weekly chart on OC. There's the trend line there. And Pulte, if I didn't do it already, you can see Pulte just broke out above the 2013 highs. But if it breaks this trend line here, this uptrend line, it's going to fail that breakout and will probably come down ultimately and revisit the bottom of this trading range. You can see a big, large sideways trading range it's been in for years right there. So again, if things get ugly, a long-term target can be down here around the $15 level. So I had to jump back on that because I missed the weekly charts. I'm still in the weekly time frame. Sorry for the confusion here. CalAtlantic CAA, just a nice, clean, big. This is again a 10-year weekly chart, so this is a multi-year symmetrical triangle pattern. Sure, an upside break would be bullish, probably bring it up to these highs back there, whereas a downside break would be bearish. But again, that's long-term stuff. I don't see a lot on the daily chart that interests me, so I'm not going to really focus on that one. But again, if you're a longer term trend trader and the whole sector starts to break down, absolutely you can, short on a break and a weekly close of that symmetrical triangle in the weekly time frame. I just don't have a good entry point or a good feel for where it's going on the daily. This is TPH Pointe Group, a little uptrend line, very impulsive breakdown, little kickback rally, and then we've moved lower. We've taken out the previous reaction low. This one looks to be headed lower, probably down here to about the 1210-ish area over time. Let's see if there's anything on the weekly. Well, here's my weekly. There's an uptrend line to watch. Let's see what happens if and when it gets there. XHB I already covered, and ITB is just another one of the home building ETFs. I think XHB is a little more liquid, that's why I focus on that one. But this one's worth watching as well. You'll notice when I look at the components, a lot of the similar components, Home Depot, Lowe's, Sherwin-Williams, which by the way is an active trade on the site. That one, they didn't clip our stops, thankfully, and I wanted to update this one as well. Obviously, Sherwin-Williams is a paint company, but as you guys imagine or know, that goes hand in hand with the home building industry. Nice, clean, bearish rising wedge breakdown. We were able to short this one on the kickback. It had a big earnings-induced drop, so I waited patiently. Later that day, it gave us a gift, an opportunity to short on the back test. This thing had made a tremendous recovery. We got almost a near perfect entry on that back test and hit our first target back here somewhere. And this is just beautiful price action for a short trade. You saw it fall to a key support level. It wouldn't have been a first target if I didn't expect a reaction there or think the odds were good. So it hit that first target level, and you can see that's the same support line I had originally on this trade. This stock has danced on that support level for weeks now. Um, Consolidated. Nothing goes straight down forever. You get overbought, the rubber band stretches. You need to work off those overbought conditions. And as I often say, there's two ways to work off overbought or oversold conditions, either in time or price. Price would have been a big move, quick move back up here, followed by a move down. In this case, which is actually, in my opinion, the more bearish of the two, we consolidated in time. This thing just didn't have the oomph to give anything more than a couple of percentage points on the bounce and has now broken down, as you can see. Not an impulsive breakdown, but we broke down Thursday, and today we traded under that support level all day and put in this little doji candlestick. PPO was trying to curl back up, but has since rolled back over, and you can see this blue line pointing down, the PPO line, the RSI is pointing back lower. Not a good looking chart unless you're short. I think that opens the door up for a move down to this T2 area and maybe this potential third target zone I have. So there's one of my favorites as well. And again, this is an active trade on the site right now. There's a weekly trend line. That one's already broken it. Big divergent high. I don't think I covered this before. It's part of the trade. So remember, there's more than just these near-term targets if you look at the bigger picture, especially if you start to see a lot of these big companies, that are key components of the home building sector or housing market break down. Um, the downside potential is very, very lucrative if things get really ugly in this sector. But again, we're not there yet. Let's just focus on these near-term targets. And as of now, I'll leave this as the final target unless I see some, supporting evidence within some of these other stocks that I'm talking about. All right, that's it. Let's wrap it up here. And as you guys know, there's just about with any sector out there now, you have ETFs that you can use to go long or short if you're unable to because of your broker doesn't have the shares available. For example, you can go long claw, which is it's actually leveraged, so take that into account with your positions. A 3 times bearish home builder ETF, bearish falling wedge, breakout, back test, boom, we're starting to move up. And on the flip side, if you don't like to go long leverage ETFs, sometimes I'll short these things just to get the decay as well as the move. So this is nail the 3-time bullish, and obviously the charts are just going to be flipped over. This one's going to mirror XHB for the most part. You have a bearish, a bearish rising wedge breakdown back test, and we're started to move lower. We've taken out the recent reaction highs and the support levels. So this one seems to be headed, down in the coming months. And you can see the divergences that confirm that wedge, the bearish nature. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.